Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, June 12th, 2023. Before I click on the charts, please click like, subscribe, please share the content with friends and colleagues, and please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this: the daily Triple Q report, the daily SPY report, weekly analysis in the S&P 500 index, the NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week you never see on YouTube that cater to the longer term swing trader, 3 to 5 weeks out, as well as kind of the near term investor, 3 to 5 months out, always looking for at least a 20% move on the underlying. That is our general target. And all that in one price package, one subscription package. So check out wickedstocks.com. Let's jump to the charts. You know, I like to start with the big picture and work our way in. And that would be really this channel structure that we settled above a couple of weeks ago, well below the market now at 203.08, did indicate a good annual low and longer term bullish continuation. The first big picture objective, you could call it near term, long term, depends on your perspective, is 271.37. I'd mentioned how this is a 2 to 3 month target. We are, I'm going to guess, 2/3 of the way there, and we're about 2 weeks into this buy signal. So we've definitely covered a lot of ground in a short period of time, and that can happen following, a settlement above a long-term channel top. Obviously, there are fundamentals that that I'm not going to get into that supported this rally, no doubt about it. So there's also, as we approach 271.37, just wanted to put out, let me say a couple things here. I'm going to show you the daily chart actually in a moment. This mid-band structure we closed above last week. It is now at 242.55 on the weekly chart. On the daily chart, I'll show in a moment how it's a little bit lower in value. But this 271.37 rising channel top that stems off that January low also coincides with a longer-term descending 2/3 speed line. So there's a lot going on now in the low 270s. I don't know if we'll see this area this week, but for the next couple, 2-3 weeks, it is a range of resistance that can absorb buying. You can see to the upper right, I have multi-week containment. That means that if we were to test it this week, can contain buying into July, possibly through July. From here, we could fall off, potentially back to this channel bottom as well. Now, obviously, in terms of indicating this channel bottom, and I don't know exactly where it's at right now, but it'll be consistent with this former long-term channel top. So we could test the low 270s and perhaps fall back into the low 200s within several months of doing so. These will be moving targets, of course, in terms of the downside momentum shift, in terms of, when can we expect this market to fall in a significant way. At this point in time, significant, but nonetheless, probably a good weekly high if we close below 240.39 today. This is the daily chart of the same, and you can see 240.39 to 242.16, a mid-band off of this channel. These have typically worked pretty well for me in the past on just about any market, whether it's commodities or stocks. So we are above it. Upward momentum remains intact. Secondary buying pressures remain intact above 240.39 to 242.16. And so dipping into this zone, and we are just above it right now, does offer a buy opportunity, anticipating the 270.21 rising daily channel top. With present volatility, we could reach this area this week, over the next 3 to 5 days, perhaps. On the way up, we've got 258.15. That's a long-term 50% Fibonacci to the upside of the two extremes, November 21 all-time high against the more recent January 23 low. So this level, 258.15, can contain daily buying pressures when tested, and we might top out here for several days, fall back into the low to mid 240s again. This mid band is rising on a daily basis, and that is kind of the dynamic setting up, I think, for the early week. 258.15 ceiling, a more solid floor of support in the low 240s. We could trade inside this zone for the next few days. 252.42, nothing more than Friday's high. And I think if we push through 252.42, 242 today, 258.15 in reach, where once again we can tap out for the day. I'm keeping it light here now. I don't have it as a 2 or 3 star resistance because I want to keep, this market, I think, is inclined with this vertical move. It's an increasingly hyperbolic move. 270.21 may be just around the corner. And so if we close above 258.15 today, that should not come as a great surprise. And if so, 270.21 likely within just, I'm going to say, 1 to 3 days with present volatility, where once again we can tap out on a weekly basis, possibly through July and fall off. I will mention, I don't have it charted anywhere, that if we were to close above this channel structure, and on the weekly chart, once again, it's still in the low 270s. If we were to settle above this zone at the end of this week, I've got 295 even as a 2 to 3 week target, and the 314 area as a 3 to 5 week target. But honestly, if we close above this convergent speed line channel top area sooner than later, over the next week or two, I see a retest of the 414.49 high as an eventuality. Now, whether that is by the end of the year, or whether that spills into 2024, I don't know. But I would say that there's a very good chance if we close above 271.37 at the end of this week, 414.49 in reach by the end of the year. It's not a stretch, 3 to 5 month bullish continuation. Until then, this is an area that can contain near to midterm buying pressures. And from here, we can ease back into the low 200s again within several months. So for those of you, there's a few things to be said here on this chart. The 2 to 3 week position trader, swing trader, is at least not short, and I would say bullish. You're long above the low 240s. That 242.55 is actually 242.16 on the daily chart, and you're holding a long position, anticipating the low 270s, where profits can and I think should be taken at least partially. You may have bought 265, 275 out of the money calls a couple of weeks ago when we settled above this formation. That was the play that I mentioned at the time, and if we reach into this area here this week, I think profits should be taken at least partially, if not entirely. And for those of you who are more aggressive in terms of the swing trade, the 3 to 5 week swing trade, the 1 to 2 month swing trade, once we push into the low 270s, you may not only take profits on those out of money calls, but perhaps reach for 190 or 200 out of the money puts. Remember, this formation is dropping gradually, that don't expire for at least, I would go 3 months out on that. This could be a sudden sell-off, perhaps. What comes up must go down. Not necessarily, I don't hold to that. But the velocity of this rally, once the high is considered to be in near term, as well as I do, that the sell-off can be aggressive. We could also wind up consolidating at the top of a move for a period of time before a sell-off may occur. That's why I say go 3 months out, because it could take that long to fall back into the low 200s once we test the low 270s. Once again, closing above the low 270s, longer term bullish continuation. If you bought those 190 or 200 out of the money puts at that time, I would liquidate those and reach for 410s, 415 out of the money calls that don't expire for at least 6 months. You may go a year out to preserve delta and eliminate the theta element from premium decay. So let's go back to this daily chart here. And I'll mention that if we break 240.39 or open below 240.39, I do have kind of a steeply rising channel bottom today at 235 even. That could capture the balance of the day's selling pressures, and we could come off of here and perhaps close above, the 242.16 level, 240.39 level. And if that's true, all systems go to the upside. If we close, though, below 240.39 today, I do think that this market can ease back to 221.32, new rising speed line. If you remember, the 221.25 level is a longer-term 3/8 upside, if you remember. I'm not going to go there right now, but that was a longer-term Fibonacci level we tested and certainly closed above the middle of last week, which was part of the significant rally here. In any event, we've got a stair-step approach on the way down, but I will say that if we gap below 240.39 today and close below it, that island reversal here up at the top that I think we can ease back within 1 to 2 weeks back into the 203 handle. We have a new rising long-term 1/3 speed line. And if I scroll down a little bit, you can see that 203.22 should actually be multi-week. I don't know how I got multi-session in there, but the 203 handle right now is your long-term support. I'll take you back to the weekly chart where I can remind you that that is the formation that we settled above a couple of weeks ago. So in terms of what to do, and I'm going on 10 minutes here. I hate it when I go that long. I think I've already outlined it, actually. I think you could scroll back to the beginning where I talked about the day trade. I talked about the 3 to 5 day swing trade. Bottom line, if we close today below 240.39, no good reason to be long this market if your time horizon is anywhere from 3 to 5 days out to 2 to 3 weeks, because honestly, if we do close below that 240.39 level, I think this market is at risk of giving it back into the low 200 area, 203 handle. And there, if you're long those 270 out of the money calls, last thing I will say, you may cover them, or at least some, and or reach for the 200, 202, something like that, out of the money puts that don't expire for at least a few weeks. You may go a month out on that. I think that kind of rounds it out for the day. 10.5 minutes into the Tesla report for Monday. I appreciate you watching. Please click like, share, subscribe, and check out wickedstocks.com.